Good afternoon, this is Sean Golding with Golding & Golding, here to discuss the basics of the saving clause and how it impacts the outcome of a tax treaty, for better or for worse. If you're a U.S. citizen, it's normally for worse. So basically, a lot of different countries in the world, a lot of different tax rules, and the U.S. has entered into tax treaties on a whole host of different issues with different countries. You've got your basic income tax treaty, which you might see referenced as a DTA. You've got your FATCA agreement, which is the Foreign Account Tax Compliance Act, which is an intergovernmental agreement. Then you've got something called a totalization agreement, which is used for Social Security purposes. The idea of the tax treaties help to clarify how the tax rules are going to be evaluated and impact between two separate countries. The U.S. has entered into more than 50 income tax treaties around the globe. Essentially, what will happen is, depending on the tax treaty and the outcome, it will impact whether there's going to be tax on certain income, or if that tax is going to be excluded, exempted, or limited, or unfortunately, even if it was going to benefit the taxpayer, if the saving clause kicks in and kind of prevents that, then that's something very important to be cognizant of when evaluating a tax position. So essentially, when you have a saving clause, it's basically a little sneaky provision that the government sneaks into the tax treaty, and it basically says, if you have a rule, the saving clause within the treaty allows the governments who have entered into the agreement to say, you know what, forget the treaty, we're just going to go by regular tax. And this is super important for U.S. citizens, especially those residing overseas, because U.S., unlike pretty much every other country in the world, taxes you on your worldwide income. Even if there is a saving clause, there are some exceptions to it, which means the treaty would still apply. It's normally some of the less common, although public pensions and Social Security sometimes kick in there, which can be a positive, especially for U.S. citizens residing overseas, earning a pension from a foreign government. Let's take a common example we see, right? Jim lives in a foreign country. In that foreign country, he's collecting pension. And Jim's not sure how he's going to be taxed, so he goes to the treaty, and the treaty says that only the country where the person resides can tax the income. Jim thinks that's wonderful, because he's not going to be taxed by the U.S. on the pension. The problem is, Jim is a U.S. citizen living overseas. He hasn't formally expatriated yet. So when you go into the saving clause, it basically says, hey, unless you're referring to one of the excluded portions, i.e., one of the portions that this saving clause does not impact, then this isn't going to apply for U.S. citizens. So stated another way, saving clause basically says, hey, if you're a U.S. citizen overseas, then the tax treaty is not going to apply to you unless it's one of these other specific portions of it that are not impacted by the saving clause. And unfortunately, you will find as you go through treaty after treaty after treaty, most of the time, unless it's public pension or Social Security, and even then not always, U.S. citizen living overseas collecting a pension is still going to be taxed by the U.S. government on that pension, even if the treaty says that the person can only be taxed in the country of residence. So even though the citizen lives in a different country, that country of residence doesn't have exclusive tax rights because the saving clause. So if going back through your taxes, you realize that you might be out of compliance for prior years, you may want to consider getting into compliance. Maybe you took a tax treaty position that you're not fond of now, or you've had second thoughts about it. There's various programs available, various amnesty programs, voluntary disclosure, streamlined, reasonable cost, delinquency procedures, etc., etc. We have lots of free information available on our main websites and our sub-websites. You can always reach out and schedule a reduced fee initial consultation if you think it's appropriate. Again, my name is Sean Golding with Golding & Golding. Thank you for your time. Enjoy the rest of your day.